AMC closed today on the red, losing 5 and 36%. That's fine. Yesterday we were up 25%, so we're still up 20% from that 34 close on Friday. That's good. I will take it. Now, guys, there is something really huge happening behind the scenes that we need to discuss in this video. The US Democrats are now actually looking closely into getting more tougher regulations when it comes to hedge funds. Okay, so bringing back that market integrity, but also trying to reduce the power that companies like Citadel, Virtuous have over their entire market, which is not good. So let's get into it, guys. Next week, the Financial Services Committee, led by Representative Maxine Waters in California, is gonna hold votes as soon as next week, as I mentioned that, on legislation that could have broad consequences on hedge funds, online brokers, and powerful trading firms, said people familiar with her plans. Now, the lawmakers are considering imposing federal oversight on large family offices, in other words, hedge funds like Archegos, on banning the controversial practice of market makers such as Citadel Securities, paying Robinhood Markets and other brokerages to execute investors' trades. A confidential note recently sent to the Democrat members. Now, the thing is, guys, let me pause here first. The thing is, we already knew that payment for order flow was part of the biggest revenue from Robinhood. Now, Robinhood is not the only brokerage firm in the US being paid by a company like Citadel or Virtue when it comes to order flow. The thing is, most of those order flow are only retail orders. And the fact that they are sitting on this, pretty much owning the entire volume, it's not fair, it's not good, and there is a conflict of interest. Anyway, there are a bunch of stuff not really sitting right with that. So that's why not only the US House is looking into it, but they are working together with the SEC, because this is exactly what the SEC, Chairman Gary Gensler, as soon as he took power into office, he said, hey, we need to fix this. We need to fix this, and my staff is already looking into this with a bunch of rules that we need to, put into play in order to level the playing field. The thing is, guys, I mentioned this a couple of months ago, that, hey, this whole AMC thing is even bigger than just apes fighting against hedges in a short squeeze play. Because what the problem is here, guys, is not only for AMC, it's not only for meme stocks, the so-called meme stocks. It's even broader than that, because it's a disadvantage for the entire market. When you think about 401ks, pension funds, IRAs, college funds, 529, this is where you have most of the net worth of the entire US population tied into, okay, including those people in power. So what Citadel and Virtuous, this whole thing is doing is harming not only the retail investors in AMC and GameStop, but also people in high chambers, in high places who have their money tied into those assets. So at a point, I was expecting, these guys to say to the SEC, hey man, what are you doing? This is not right. They are making us lose a ton of money here, so we need to do something. Okay, so this is definitely what we are heading towards. Now, the thing is, it's not going to be easy, because the hedges are, they have strong lobbies, they have money, and as far as I want to believe that this is going to be something that will change things, radically, I don't think so. I'm just being realistic and honest. So it won't be a huge catalyst on the short term, but on the medium term, give it a couple of months, to see how we develop, in order to see exactly if these guys are really, drastic about it, which they seem to be. This might lead to less power for Citadel, more rules and more transparency, because what they are willing to do here is they want more transparency. So they are working with the SEC, and also it goes back to what FINRA is actually enhancing when it comes to short selling for hedges. Okay, they introduced this couple of weeks ago, and the whole thing here is, first of all, you need guys to publish your short interest on the exchanges. Okay, and then the content on those short interest data and the frequency where you report those numbers, because as of now, We are on the dark. We are in the complete dark when it comes to the synthetic shares, the naked shares. We have no idea. But if the market were transparent, which the FINRA and the SEC and now the US House are trying to get to, you will know exactly what are we working for, okay? And it will expose the entire manipulation that is going on with AMC and GameStop and many other assets in the across the US markets. So again, guys, it's a big catalyst, a huge thing, but we need to keep our expectations realistic, okay? I'm not saying it won't change anything. I'm just saying this is a good step forward.